Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Monday edition. Happy August 2nd. Man, it's just so crazy how fast this year has been flying. We are racing towards the end of the year and putting in some pretty darn good numbers along the way. So we'll talk a lot about our markets overall today, since the questions that came in over the weekend and today were predominantly focused on equities. I figured why not just do a kind of an equity show, which I call it Stock Market Monday for today. And of course, I will go to whatever listener questions you guys have for me along the way. So hello, Lori. And by the way, Lori, I did manage to get your package sent to Russ, so he should have that. If he doesn't have it already, he should have it in the next couple of days, so check with Ross. Also, hello, Les Tomasina, Jerry, Eric, Katut, Siraj, Tom, good to see you, and Terry as well. I'm sure others will be joining here a little bit later. Again, you know the deal. If you have questions, send them on in. I'll try to get to them as we progress through today's show. So let me start off by just talking about the overall markets. They had some nice strength early on and then kind of gave up the ghost near the end of the session, which I like. That generally leads to a weaker opening for tomorrow, but we'll have to wait and see how that all pans out. That said, let's take a look at some numbers here. Hello, Echo. Good to have you. Oh, good. You got it? Awesome. Great. Let's see. I'm going to start from the bottom here. Crude oil, since that's actually a question for today. There was a question I'll get to, says something like, is the top put in for oil? Well, we'll break this one down a lot more. Today, ugly day, down 3.33% for crude oil, making it your worst performer on the day. You know, what's noteworthy for me is it's getting near the $70 mark. I'm a big fan of whole number psychology, and $70 would be a pretty big one, so we'll see if that holds. But right now, just a good amount of chop over the past couple of weeks. Bitcoin suffering a little bit in the last couple days here with a little bit of a sell-off, but you know what? It's still holding right up against that supply level around 40,000, so I'm okay with that. Give me a little volatility is fine. What is noteworthy, and what I'll probably do a couple shows on here over the next couple weeks, is the regulation that's coming into the crypto space, not just domestically but abroad. You're also seeing major changes to margin. And in case you guys didn't think cryptocurrency was crazy enough, for the most part, up until maybe 2 years ago, it was pretty much cash-based, meaning you had no margin. Then all of a sudden you saw some places do margin. Some are doing over 100 to 1 margin, which is ridiculous. You want to blow your account incredibly fast, then go look full all in with 101 margin and have something rip against you just a little bit. You'll lose all your money in there. So a lot of regulation coming on regarding the margin limits. I know Binance and FTX both dropped their margins from over 100 to 20, so which I think personally is a good thing. This also was a major change that was done back in the late 90s for the equity markets, when they kind of removed unlimited margin for stocks and did 4 to 1 intraday, 2 to 1 overnight. Really put the handcuffs on people going crazy with regards to equity. So I think it's a good thing long-term for the crypto market. What else is on our list? We'll move up. We got the Russell 2000 ended down 0.4% on the day. Technically, no big deal. Oh, the yellow box, you ask? Sure, let's just move that one forward. There you go. Nothing going on, middle of the range. You know, we're down 0.4%, but really most of these indexes didn't seem like they had major moves by the end of the day, but we did have a long topping tail on the Russell. Same thing on the S&P. We came back right up to all-time highs and then sold off. So, you know, let's add a yellow box to this one as well. Here we'll put a little yellow box around the current price action of the S&P 500. Which is where we are stuck in right now, although we're creeping towards the low. If we get below that, I will personally be going short on the S&P, but that's going to take a break below. Let me get the real low here. The real low is going to be right around, I'll call that line 43.63, and we'll snap it and put it right there for you guys so we can keep that on our screen. There you go. All right, so that's kind of my short point here for the equity markets, at least to start a short position. Again, you're shorting something that's so unbelievably strong, but at some point this will have a nice little pullback and I'll be rewarded. Next up on the list is gold. Still holding gold. I still have gold long. You know, I was disappointed when you saw that nice big drop on Friday, but it's okay. We don't mind. It's fine. We'll let that happen. Right now, 0.02% change, so we're pretty much unchanged on the day. This is called a long-legged doji, which has got these long topping and bottoming tails and pretty much open and close at the exact same price. So really nothing going on there with gold today. Moving up, we got a little bit of a positive note for the Nasdaq, although you do have a shooting star formation, which is this candle form right at the end, which is relatively bearish. To be honest, it's not a bullish sign. So we'll have to see how tomorrow pans out. If you go by the rules that I place on Japanese candlesticks, it's pretty simple. You'll be looking for a short if we close below 14,932 on the NQ futures. Lastly, bonds, which we really haven't been paying too much attention to. You saw bonds really rally today. That means yields were falling. And all in all, you look at the big picture, it looks like it's going to continue to move on up, probably till we get to about 135 on that 10-year Treasury note. All right, cool. Well, cool, Tom. It's all about the yellow box. All about assisting and help. All right, so that is a quick market rundown looking at the major equity indexes. Now I'm going to go through and show you some of the things that happened today. Of note, coming up here in just a little bit, is the Australian dollar. There is a rate announcement happening at 9:30 p.m. Pacific time, so that's just after midnight for you East Coasters. But here is what we've got cooking for today. Now, on the grand scheme of things, most of the manufacturing data came in pretty decent. I mean, there was no real major surprises. If we look at the U.S., we just barely beat our manufacturing numbers on both the on final manufacturing PMI, but the ISM was just slightly lower. No big deal. Construction spending was up, but less than expectations. So nothing here is really that out of the ordinary. Just pay attention to this Australian dollar rate announcement happening, which we'll analyze the Aussie dollar here in just a second, but that rate announcement could have some big implications for the Aussie dollar. And then we have, that's it. All right. Earnings-wise, this is going to be what's cooking for tomorrow, so I don't want to go into that yet. We'll talk about that at the end of the show. And I had listener questions, so here's where I get to start my listener questions. All right, Michael. Michael says, I hold some GE in my retirement account. Can you explain what happened today? I feel like I made a lot of money. Yeah, I'm sure you did. I'm sure you did, Michael. This has actually happened to me in the past where I was in some crappy little penny stock that did like a 20-for-1 reverse split back in the 90s. And I remember looking at my account going, good God. I mean, imagine if you own something at $1 and you come in the next morning and it's trading at 20. Well, that's what a 20-for-1 reverse split would do. And I was like, oh my God. It jumped to $20. I'm rich. Well, yeah. Let's say I had 1,000 shares. Well, now I only have 50 shares. Right? That's how the reverse split works. So you get fewer shares at a much higher price. So on balance, you didn't make any money there, Michael. It's pretty much the same thing. Now let's go take a peek at GE and see what happened out here today. There's people selling the split. You can see today there's much higher volume than normal. Average volume for GE is roughly 7.6 million. We came out at almost 25 million shares traded today on GE. And you notice that nice big red candle. Now, of course, that did look similar to what we saw for the major market indexes. But normally, again, when you get a reverse split or splits period, that's usually when people sell their shares because now they have a lot more of it. So, Michael, you feel like you made a lot of money? You didn't. You probably actually lost money today because if you look at this one, that candle, if you're still holding it, you lost money today, down to the tune of about 2.27% on General Electric. Now, grand scheme of things, do I think this is good? No, I personally don't. In my experience, and this is GE, I don't mind GE. I actually think I have like 1,000 shares sitting in an account somewhere. Well, now it's probably, since it went 8-to-1 reverse split, I've got a lot less than that. But do I think long-term GE looks good? Look at that price chart. It doesn't look very good, right? It's just kind of traversing sideways, and I can go to the monthly here to see what's been going on. Yes, it's had a pretty aggressive rally from mid-2020 on, but so is everything, right? So I'm not that overly bullish on it. I forget why I was holding it. I think I bought it for some, they did a spin-off with a railroad company a while back, which I wanted to capitalize on, and I caught that split. Normally when you have a reverse split, what you're doing is you're taking shares of something that are not really good, right? They've been sliding, so the shares are getting cheaper and cheaper. People just don't like it. It's falling out of favor. And it gets to a price point that's so low that the security actually has the potential to be delisted, meaning it could get removed from the Nasdaq or the New York Stock Exchange or whatever exchange that it's on. So in an effort to do that and make the company seem a little bit more stable and valuable, they'll do a reverse split. But remember we talk about all the time, the trend is your friend until the bend at the end. So if we see something trending down and continually trending down, you do a reverse split, it's still trending down. So a reverse split does not make this company better, just like a regular split doesn't make the company any better. I mean, it's still the same company. It's just the share structure has changed. So I mean, obviously, I think the price chart here is starting to look much better for GE because it's starting to make some new highs. But we'll see how low this current price drops to. This is a monthly, right? How much lower is it going to go before we find some area of demand? Now, does it retest this mark that we established right around 86 bucks? Yeah, possibly. But no, you didn't make a lot of money on the split. That's just the nature of the beast there with regards to splits, Michael. Okay, let's see. Second question. What up, what up? Good to see you, Kevin. And Walter. And Jerry. Oh, bummer. Gotta leave Jerry today. No worries, Jerry. Do your 700 push-ups, buddy. Let's see. Heather says, do you think that the bull run is done for oil? Great question. And this is not a technical question, right? Because if we look at this price chart here, this is a monthly. You know, you'd say, well, what bull run? It feels like it's been on a downtrend since 2007. Well, let's go look at something a little bit cleaner. We go to a daily time frame. This is one hell of a bull run. Very aggressive since November of 2020. Now, the question from Heather, oops, sorry, I might be showing the chart. There we go. The question from Heather was, is this bull run over? If you look at what's happened in the last 2 months on this price chart, it's already starting to fail to make new highs, right? So you saw this third chart here. I'll zoom in a little bit so you can kind of see the technical side of it. Get rid of that old yellow box because that was a good breakup. On the 13th of July, 13th to 14th, it made another rally towards that all-time high and then just came cratering down. So that failed attempt to me just says there's a little bit of weakness here on this price chart for crude oil. And then, of course, we came down and retested some demand levels right around 66. And then we subsequently had a monster rally back up. Great. Well, if this was really going to continue that bull run, in my opinion, you guys may differ in opinions, it needs to make a new high. So it's got to get above 76 here. It just didn't. And if we look at the factors facing crude oil right now, here's the problem I see. Let's look at the positive side of things, like what would be potentially good for oil and the price of oil. Consumption. If demand continues to increase, great. So let's say this whole Delta variant COVID turns out to be nothing. Florida and Texas, the states that are really spiking in COVID cases, maybe they figure it out. Maybe it was just a regular. Who knows what the case may be. It seems like it's out of control right now. But if that starts to spread to other states and all of a sudden we get 10, 12, 15 states all of a sudden having a very aggressive surge in this Delta variant of COVID, we're probably going to go back into lockdowns, which means that people won't be traveling all of a sudden during the summer, which means things really get locked down. What happens to demand? You'll probably see crude oil take a nosedive. Okay, that's just the demand side of it. If we look at the other side, which is the supply side, you have OPEC, Saudi Arabia and Russia and the other OPEC members basically saying, we are going to increase production because demand was surging, right? We were seeing a huge spike in demand for crude oil. Prices have gotten really high, especially if you live out here in California. It's unbelievable. I mean, I'm just about to see $5 on some pumps out here. Well, if demand keeps skyrocketing and demand doesn't change, or supply doesn't change, then of course the price of gas is going to get expensive. And Chris out there with his 68 Camaros and classic muscle cars, it's going to be much more expensive to drive those things. OPEC raises production, which in theory should reduce the price of oil because you increase supply, demand is going up, great, we accommodate for that. But if all of a sudden the storm switches here and I have supply increasing and then demand comes to a halt and drops aggressively, what's going to happen to the price of oil? You're going to have extra supply on the market and nobody there to buy it. You could see some pretty good downside moves here in oil, and that's just going off of the news available and kind of knowing market trends around summertime, COVID, and the supply out there for oil with OPEC. So do I think the bull run is done? It's hard for me to say that something is done. I definitely am feeling more bearish on crude oil right now, given the fact that COVID variant might actually be put us back in a shutdown mode. I'm hoping it doesn't because I'm really enjoying going places without a mask. It was actually great. I did a presentation for Minneapolis this weekend, and it was great. Only one person in the whole room had a mask on, and that's their choice. That's fine. But it was nice to see people's smiles and expressions. I feel happier knowing I can see people's smiles now as opposed to, how you doing? I can't see your face. Don't know what you're doing. You could be sticking your tongue out at me or snarling. I have no idea. Anyway, so Heather, I'm feeling more bearish on crude oil right now. The tough part is if I look at this chart, if I am bearish on it, where am I going to make a trade? Right? Because that huge drop we saw around the 19th of July, that's kind of that spot that I would say, all right, if we get below that 66, I might actually, look to go short. It's like, well, that's a long way away. I mean, that's $5 away. That's some huge amount of money I'm leaving on the table. So I'm not super happy with the trade setup. I wish that this dip that we saw in July was much higher. So, I had an earlier point to get short if I wanted to. I'll probably not be shorting oil. I'll be a little cautious on that one until it proves one way or the other. And, I'll leave a lot of money on the table with this one if I do finally get in, but I'd rather not take that risk right now. Yeah, Chris says MPGs, what? Yeah, exactly. It's funny. I think I told the audience this. I've been looking at buying the Toyota Tundra for quite some time. I'm a Toyota guy, always have been. The gas mileage on the Toyota Tundra is 13 miles a gallon, and I'm willing to bet Chris is a classic car guy. I think what do you have? You have a nice blue 68, right? I think you got a 68 Camaro. That thing probably gets better gas mileage than a Toyota Tundra, which has got a V8 engine, but it's should have new technology. How can Toyota not come out with a more efficient vehicle? Anyway, I'm so sorry, Heather. I'm not that optimistic on oil. If I had to choose, is the top in? Yeah. I think I'm going to say the top is in. And remember, I've been bullish on oil since we saw that huge aggressive sell. I've been bullish on oil back when Ruben was on the show. Now Ruben fell off the reservation, is now becoming a politician, apparently. Good luck, Ruben. Hope you do well. Let's see. Okay, Gary, that's a good point. You said tanker wars in the Persian Gulf. Now, of course, anything that could disrupt that supply obviously would have a big impact on the price of it, right? So if we do get some conflict out there, someone sinks a tanker or two, oil will probably spike. But I'm just going purely off of the fundamentals and kind of market dynamics. Everything staying, all things remaining even or constant. And I'm looking at like a conflict, like an attack or something, as a non-constant. I guess even the COVID variant, is that a constant? I'm making the assumption that we're going to go more into lockdowns, which I might be wrong. I hope I'm wrong. But any sort of outlier like that can create all kinds of havoc for our markets. Let's see. There's one other here with oil. Let me see. I'll jump to this one. This is from Will. It's a good question. It's one that really perplexes me as well. He says, during April of 2020, the price of oil futures went below zero due to storage costs, and a lot of people were burned when they bought oil futures right before and see their account went negative. My question is, can this still happen when one just buys oil ETF like USO? Can USO only go to zero but not negative? Great question, and this is still a challenging one for me because when crude oil went to negative $40 a barrel, I didn't think that was possible, right? And of course, the storage cost. So maybe if it's deliverable, we have that factor because you have to have the storage cost of it. From my experience, the lowest anything can go in the equity market is zero. Now, futures may be a different ballgame. So if you're buying USO, it's a kind of a trick question because what does USO own? USO buys forward futures contracts on oil. So they are invested in the CL contracts, right? They're buying futures, but they're buying a combination of them. It's not just they're buying one contract. They buy a series of contracts in this. So, I guess the honest question is, in theory, USO should be able to go below zero if something like this would happen. I don't think we'll see this happen again where crude oil goes to negative $40. I just don't see it happening. I think the systems will have learned what went on and prevent that from happening in the future. I'm hoping that's what happens. But if USO is trading oil futures and oil futures went to negative 40, sure, it's a potential. Now, what happened to USO when that happened? Let's take a peek at the price chart. So let me zoom out here. Let's go to a daily and I'll scroll over here. Bear with me 2 seconds as I try to zoom way back and show you that negative 40 print, which is nuts. So the continuous contract doesn't even show it. And this is why USO didn't go below zero, because it has a combination. And this right here, CL, the continuous, is a result of many contracts rolling and connected together. But if I looked at that specific contract, it probably would have shown down to negative $41. So USO is going to look the same. We go back and look at USO. I can show you what happened back at that moment. So here's USO, and you can see it did not go negative that day. We went down to $16. I think this has done a reverse split since then. So, in theory, given what happened with oil, yes, I think it could go below zero, but I don't know. It's a trick question. I really don't know. In my opinion, stocks should never be able to go below zero. That blew my mind. That was one of those things where you hold something in your brain as this is law, right? The lowest it can go is zero, and all of a sudden I'm like, wait, it's negative $41 a barrel. You're going to pay me to buy this futures contract? Okay, I'm in. That's crazy stuff. Echo says, do you think COVID was an excuse since they knew oil was going to tank? Maybe. I mean, who knows? There's so many speculative theories about COVID and conspiracy theories on it. I don't know. At this point, I'm just trying to ride whatever waves this market gives me and opportunities, and try not to formulate too strong opinions about COVID. I mean, it is what it is. And the sad part is I could state my true opinions on what I think about COVID, and I'll offend somebody, or they'll get, So, no, it is what it is. COVID's there. We'll deal with it. All right, next question. This is a good one because we had some talk today about this. This is from Ethan. He says, can you talk about what happens when a company buys another M&A? Okay, well, we had this today. If you were following the news, you had Square, which I'm a fan of, definitely very bullish on Square. They actually made an acquisition of an Australian firm that's in the similar space called Afterpay. Now, for Ethan's question, can you talk about what happens? There is never a guarantee about what happens when one company buys another. So let's say that I'm a publicly traded company, and Chris here, who's got a mechanic shop in Northern California, he's publicly traded too, right? And let's say I decide to buy Chris out. Normally what I'm going to do is I'm going to have to pay a premium. So let's say his shares for his company are going at $50 per share. I will usually pay a premium for that. Okay, I'm going to come pay $60. And Chris is going to go, well, hold on a second. Let's see. My valuation right now is $50. You're going to give me a 20% premium on that. Okay, I might, or maybe he negotiates to 70. You know what? I'll meet you in the middle, Chris. I'll go 65. Normally what happens is the company that's being acquired, in this case, Chris's company, that one's being acquired by me, that one rises because I'm paying a premium for it. Normally what happens on the other side, though, is my company drops in value by a corresponding amount. So you'll see usually the share price of the company that is doing the buying drop. That's not the case of what happened here with Square, and it's because of some synergies out there. So let me show you what I'm talking about. Here is SQ. Square is the company that did the acquiring of Afterpay today. And you can see huge spike up. There was an average of 8.4 million shares traded on Square. Today, 45 million shares. So significantly higher than normal. Now, what happened with Afterpay? Now, Afterpay is listed in the U.S. on the open market. So AFTPY was the symbol. Of course, they had a huge spike up, right? They went from right around $70 and they're all the way to 95 right now, a 35% jump on massive volume. And what's interesting is there was almost no volume anyway. This thing trades on average 41,000 shares, so it's very illiquid. So big spike up. What does it mean? Well, Ethan, if you're thinking about which one to buy or to sell here, very risky. History has shown me that the company that does the buying usually goes down. But we're in a different market dynamic, because if you can find an acquisition that offers a great synergistic benefit to your company, then it should be a win-win for both, right? You're removing maybe some competition and now absorbing their entire market. In this case, this company, Afterpay, is in Australia. Got a similar model to Square. So they've now all of a sudden made a huge reach with their business and saying, now do we have a huge foothold on payments in the US, but now we can have a huge foothold on payments in Australia, and who knows if there's a European counterpart or if Square is already in that market. So normally, Ethan, the company that buys drops, the company being bought rallies sharply. Now, how long does that last? I don't know. I don't have any personal data record of that one, but I do follow it a lot when I see a merger and acquisition type to see who gains, who loses on it, and that's my 2 cents on it. Let's see, what do you got? Let's take your sideways and yeah. Hey, you know what? Stick a couple takers sideways and disrupt that guess. Yeah, it'd be great. Working my Nova right now for hot August nights. Chris, you'd have loved it. I had a 1955 Porsche 550 Spider. I could have used some mechanic work on that one. You would have loved it. Let's see. Went to high school. City of Pontiac. Chevys always look... All right. Square also had earnings today. Yes, they did. And since you're on that one, let's go and show you the earnings announcements, because I had a whole list here. I thought of earnings. Not there. Let's see. Well, real quick, let me bring up the Square chart. Was it today? For some reason, I'm not seeing. Oh, this is for yes. It is. It was today, and I had the number, but I didn't post it because I didn't think it was that significant. Tomorrow's earnings calendar's got a lot of really big stuff. For today, on the earnings call, you had. It wasn't Square today. It was Simon Property Group was the one I was watching today. SPG. They had a huge beat as well, but I didn't see Square on that list. Anyway, let me find out exactly when Square is. But there's your Square chart, and you can really tell when Square's earnings by looking at like a 5-minute time frame and go to 24 hours. This was the news overnight on the acquisition, so or at least from Friday through till today. So let's go to SQ. Let's see exactly when the day. I could have sworn that was last week, if I'm not mistaken, but I don't know. I got too many earnings in my head. Yes, they should be at any day now. Yep. So it doesn't give me the exact date on here for SQ. Update in a second. Huh. I know it's here somewhere. If it's not tomorrow, it's sometime this week for sure. But if you thought it came out today, maybe it did come out today. I shouldn't see it. All right. So what else do I got? I had one other question, or a couple actually. Got the bull run of oil is over. I got the merger and acquisition for Ethan. I got Will's question about oil. Ooh, Clint. Any advice on the Aussie? Yeah, stay away from it. Thanks, Big Ab. I thought it was this week. Yeah, I mean, there's like is there maybe like 900 or 1,500 companies reporting earnings this week, so I lose track. So, any advice on the Aussie, Clint? Yes, I would be very careful on the Australian dollar, and the reason being, obviously, you have the announcement tonight with regards to rates. Right now, it's at 10 basis points for the Aussie dollar, but here's why it's important. AUD USD. Bring in that price chart. Where are we at right now with the Aussie dollar? Here's your price chart. We'll go to a daily because that's where I like to start my analysis. We can throw that yellow box on here, and there's a phrase, of course, that I love. Trend is your friend to the bend at the end. Throw on that yellow box. Where are we at? We're just traversing sideways in a fairly small little range on that. And I'm cheating a little bit here and cutting off some of these tails, kind of going to where I see best fit. You'll notice that it's in that tight little box, and the trend is down on this. The Australian Royal Bank of Australia has been very clear that they want a weaker Australian dollar. Well, maybe they'll give some clarification at the meeting and say, here's what levels we're looking for, targeting. You know, is it 65? Is it 70? Right now you're at 73.60 on it. You know, it's really to me about the talk track from the Royal Bank of Australia. I don't expect them to raise rates, but we're starting to see more inflationary pressures, and some of these central banks are doing things proactively to maybe get ahead of inflation. And in the U.S., we haven't specifically raised rates, but we've done sort of little trick things behind the scenes, lending rates and encouraging banks not to lend money out by giving them greater interest just to park their money at the Fed, thus removing money supply from the market. So, if we do have a rate announcement or anything crazy comes out with the Australian dollar, you should get some pretty big swings in this one. If you're looking to trade it, look, I think you're stuck right in the middle of a range. I'd be looking to go long above 74 and short below 73. You get a 100 pip range right there to be playing with, and right now you're stuck pretty much in the middle of it. So there you go. That's it. All right, last one. What time we got? All right, we're doing good. So here's the last one. This one came in on, I think, Friday, and I didn't get a chance to get to it on Friday's show, from Rudy. It says, do you happen to know about BitQ and BitW? Yes, and this is going to be something that we will talk a lot more about because as time progresses, we are going to see a lot more cryptocurrency products listed on exchanges. Right now, most people's only exposure to these cryptocurrencies and cryptocurrency markets are going to be buying directly or going and buying like mining companies and things like that, which I don't feel are the best. So let me bring up, I thought I had it all set up here ready for you guys. Oh yeah, it's in the browser that should just die. I have it in the Edge browser over here. So I wanted to bring these two up, and I'll bring up the price charts in just a second, just to show you. Now they're both competing against or trying to be first to market for specific ETFs. If you look at the holdings for BitQ, right, it really depends on what are you trying to accomplish. Pretty much, its number one holding at 12.99% is MicroStrategy. For let's be honest, MicroStrategy is pretty much a Bitcoin proxy. Why? Because they own so much of it. I think they might be one of the biggest single holders of Bitcoin as a business in the world. Next on the list, you've got Coinbase Global, Silvergate Capital, Marathon Digital Holdings. A lot of these aren't specifically cryptocurrencies. They are companies that are in the cryptocurrency space, right? And you see a lot of ones we've talked about in the show. I think I've actually talked about Bit Digital. You got Tesla on here as well, right? Would you consider Tesla a crypto company? No, they bought $1.5 billion worth of Bitcoin. Apparently that makes them a crypto company. The CME Group, right? You're talking about the Chicago Mercantile Exchange. Apparently that is a crypto company. No, it's an exchange where you can trade Bitcoin futures. So I don't see this BitQ as being a good representation of the cryptocurrency market. It's just basically companies involved in the space. But you want to buy crypto, this one is very interesting. This is the Bitwise 10 Crypto Index Fund, and look at what it's holding. It's holding Bitcoin, Ethereum, Cardano, Bitcoin Cash, Litecoin, Solana, Chainlink, Polygon, Stellar Lumens, and Uniswap. This looks like my portfolio. There's 3 on this list that I don't own in my portfolio, which I might be adding sometime soon. Actually 4, because I think Bitcoin Cash is trash. So I've got over half of these in my portfolio. But this actually goes out and owns these cryptocurrencies and keeps them in cold storage. To me, this is very exciting. This is BitW is the ticker symbol for this one. I like it because it actually is holding cryptocurrency. It's physically holding them. So that to me would be a good one, but let's check out the price charts. I think they're a little scary when you look at the price charts. So let's look at BitQ first. BitQ is the one that had MicroStrategy as its #1 holdings. These are both relatively new. You can see volume is very low. And going back to a question that Tom had a couple weeks ago, which was, when do you start evaluating these things from a technical perspective, right? If it's an IPO and has no history, when do you really feel comfortable getting in there and trading this? Well, I'd feel a little bit better here because I know the holdings, right? So if this is holding directly those investments, you should be able to track how the performance is going to go. It's no longer speculative like, is this company going to succeed with its new product? Or are they rolling out a new software version? No, it's a portfolio of cryptos. Therefore, it should be much easier to track the performance of this one. So at any point, I think you could start jumping on BitQ and using technical analysis. The challenge here is it's got very low volume, guys. Traded 91,000 shares today. Like I say, it's really brand new. I would see if there's an adoption of this one, but I actually personally wouldn't go with it because I think there's other technology funds out there that have more liquidity that pretty much have the same companies in it. Now, BitW, that is a different ballgame. Sorry, I had this backwards. The one I just showed you was the company. So that one I would wait longer. This one, BitW, is the actual cryptocurrency. I feel more comfortable with that. Yeah, Walter, but that's the nature of the beast. Walter says it's so heavily weighted on Bitcoin and Ethereum. Yeah, unfortunately, I agree with you. It is heavily weighted, especially the Bitcoin side of things. I'm okay with 25% in Ethereum, but 64% in Bitcoin. I mean, I've got 89%. Let's call it 90% of the assets here are in Bitcoin and Ethereum. That's a little lopsided, right? Why don't I just go and buy Ethereum and Bitcoin and just call it a day? I'd like to see some of these other ones down here, like Uniswap or Polygon or Chainlink, Solana. Maybe get those up to at least a single digit. Get me up to 2 or 5, maybe 10%. Personally, and then this is the way I like to do portfolios. You guys remember? What did I do with you guys on the show? I think I did a show on what my ideal cryptocurrency portfolio would be, like how we'd construct a portfolio. And you remember I broke it into 4 distinct segments, and within that segment I allocated appropriately, but I had divisions of that portfolio. There's a couple ways you could go about it here. Like I would be more comfortable with this one because it has Bitcoin as its lead, and I think that's probably the best. However, if you got 10 securities in here, why don't you just go 10%? Boom, 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 10% a piece and call it a day. Granted, it's going to have a lot more volatility, but it's giving me exposure to other markets. All right, that would make me feel better about it personally, just because I want to have more of the other stuff. Bitcoin's easy to get. Uniswap, Polygon, Chainlink, Solana. I mean, those ones are a little more challenging to purchase. You have to find the right exchange that carries those specific cryptocurrencies. At least 5%. Yeah, Walter, that makes sense, right? So even if I had 5% in every coin other than Ethereum and Bitcoin, let's see, 5, 10, 15, 20, 25, 30, 35, 40. It'd be 40%, which means that 60% of the portfolio would be in Bitcoin and Ethereum. Totally fine with that. But let's spread it apart here. Let's spread it apart. Big Eb says, the whales are moving Ethereum in large amounts right now, very little to exchanges. Yes, and that's because of the regulation that's going on. If you know, the KYC stuff that's going on is getting really aggressive. Binance is really starting to crack. Binance actually dropped the amount that you can pull out per day. It used to be a pretty high amount, but if they don't know you, meaning you haven't sent in documentations and IDs and all that crap, they're not going to let you pull out more than $2,000 a day. So if you get a big chunk there, you better pull it all out quick if you want to remain anonymous, right? And what you're seeing is a lot of people pulling them off the exchanges, moving to other locations, which, fine. It's just the nature of the beast. If someone's going to charge you a lot of fees, what do? You pull your money out and you move it somewhere else. In this case, the KYC stuff, they're going to move it to places where, if they want to remain anonymous. So there's some people that really are cautious about that and afraid for the governments to see all their crypto, fine, you can dodge crypto or the exchanges and governments for a while, but eventually you have to pull it out somewhere, and that'll end up catching up with you. Let's see, what other was another one that I thought another piece of this was there's some regulation. I don't know if you guys saw it, but there is a piece of legislation that just got proposed that says that the only institution in the United States which can have a stablecoin run or operate a stablecoin would be the Federal Reserve, which basically paves the way for the Fed coin. This would be very bad for crypto, right? Because I think the cryptocurrency world does a great job functioning because of its ecosystem with stablecoins. At this point, I think I told you there's like 65 stablecoins out there. Imagine if all of those got shut down immediately. Most of those are pegged to the Ethereum blockchain, right? They're attached to the Ethereum blockchain. It means you could see some pretty big selling action in all of those stablecoins as people fight for redemptions and pull it out. But that could also have a big impact on Ethereum, because if you no longer have those 65 projects which are doing tons of transactions and business on Ethereum's blockchain, you remove that from the equation, you could devalue Ethereum quite a bit. So I'm still very bullish on Ethereum overall, but it is a little scary. It's a little scary seeing what the Fed is proposing. Now, we'll have to see what the final wording is, but it was just kind of a proposed document. I was like, ooh, that's not good for the crypto space. And that's why a lot of people are pulling out of these exchanges. The KYC and the uncertainty, the FUD against stablecoins, etc. All right, what else do I got? NJ, good to see you, my friend. Loaded up puts on BAP on Thursday, sold on Friday, nice profit. I believe we can break $100. Peru is getting destroyed by left. Oh, Peru is out of my purview. I haven't been following that too much. But great. I mean, hey, it's horrible because in that message you talk about, Peru's getting destroyed by a left economist president. I mean, no one wants to see an economy suffer or fall. But, as a trader, I try to put my emotions aside and be like, hey, if I can make money off of something, off of an event that's going to happen regardless, great, let's do it. Let's see, question was, where was it? From NJ, crash on the Russell incoming. Well, let's look at the RTY futures. Here's the chart of the Russell. And is it incoming? Look, I personally think the markets are headed for a crash, but I've been saying that for years now. So I'll be right someday. Someday I'll be right on my crash, and hopefully I'll be loaded to the hilt with puts and short positions. But look at the price chart. That yellow box tells you what? Right, NJ? I mean, it's actually just stay sideways. Oh, cool. Do you live in Peru, NJ, or you're in the U.S. but from Peru? It's on the list. I'd love to go to Peru someday. Not Machu Picchu. I'm not one of those cheesy tourists. But yeah, it's staying in the yellow box. So until we get a close below 2100 on the Russell, I still think you're looking at something just traversing sideways. Play the range. So Walter says, could be just a pullback. Crash, time will tell. I don't think what you're seeing now is a crash by any stretch of the imagination on the Russell, but at some point, I do think these markets are going to have a pretty hefty pullback. Drew, good to see you, Drew. Yeah, you've got basically a beautiful sideways channel, right? And this is one we've talked about. When it gets up near the top, short it. If it gets near the bottom, buy it. Just make sure you have a stop loss in place, because if it breaks either one of those top line or bottom lines, get out. No big deal. Move on. Tom says, we know that Nancy Pelosi and hubby, great traders. Yeah, just before legislation comes through. What is she holding? Good question. That would be an interesting one to see, like, what is her husband holding in his portfolio? If he holds Ethereum, then I'm pretty sure we won't see anything happen with stablecoins. But boy, there's going to be a lot of pressure on that. There's going to be a lot of pressure. And it's the big unknown to me right now is that regulation going to come heavy-handed? The most extreme thing that could happen is what's being proposed. And that is the only stablecoin can be the Federal Reserve. That would be crazy. It would be crazy to an extent, right? Personally, I might get some hate mail for this one, but personally, I don't particularly care. I like competition. I like free markets, so I'm fine having 65 stablecoins. I can choose which one I want. As long as I have a mechanism for me to go from a cryptocurrency to a stablecoin seamlessly, I'm fine with that. I'd rather it not be the Fed, but if that's the only one I have and it's backed by the Fed, I don't think that's the end of the world personally. I just think you remove competition, unfortunately. But what would you trust more? A stable coin like Tether that has all kinds of derivatives and weird crap going on in the back end, or one that's backed by the government? Probably going to say I trust the one that's backed by the government with regards to not failing and always being there, not breaking the buck, as we talk about on a previous show. So It's tricky. I'd love to take like a bet one day or do some kind of show on when that Fed coin will be put into effect. My guess is by the end of next year, you will have a working prototype for the Fed coin functioning. Ugh, scary to think. Scary to think the Fed is going to have their stable coin. And what's worse is people actually think that the Fed having a cryptocurrency is like Bitcoin. It is nothing like it. It's the exact opposite. It's just basically a digital dollar that they can manipulate over and over and over again. I just cashed out my Robinhood Ethereum on Friday. Cool. Good, Chris. And if you want to move it to an exchange, it depends on what you want to trade, but you can move it to Kraken, which I like. Unfortunately, the access to your bank account's a little tricky with that one. If you go to Coinbase, it'll connect directly to your checking your savings account, and then just do your executions on Coinbase Pro because the fees are a lot lower. All right, let me see what else I got cooking for this week here. Boom, boom. That was that one. Yeah, I didn't do I fell off the wagon with regards to my June challenge. I did a lot of German, but I didn't do my crunches, so I feel guilty for that one. Maybe we'll start up a challenge here soon. If you guys want to do one, I'll see if I can start a challenge up again. I'll pick something. So here's what we have cooking for tomorrow. This is the economic calendar for the 3rd. You can see that really not major stuff going on for the U.S. In the middle, you do have the IBD economic optimism numbers as well as factory orders, which, is expected to decline, but I don't see any real major market movers stuff here. I still think that the Australian dollar will be a fun one to watch tonight and into tomorrow. They also have retail sales coming out tomorrow night, and they're expected to decline there as well. So those are two little announcements coming forward here. Now let's go, boom, boom. There's your earnings calendar. Alibaba, BP, Activision, you have Energy Transfer Partners, Amgen, Eli Lilly, Bausch Health, ConocoPhillips, and I believe you do have Occidental Petroleum as well. This is going to be a very heavy energy week with regards to our markets, meaning a lot of energy companies reporting earnings. You saw Chevron and you saw ExxonMobil report earnings last week on Friday, and here's what their charts look like. They had nice little dips even though they blew out earnings. And then Chevron, this is Exxon you're looking at, but let's look at Chevron real quick. Chevron was talking about doing share buybacks, right, which usually should push price up. Well, didn't really get much of a move. Today you've got kind of a little bit of a shooting star, bottoming out at 101.63. So we'll keep an eye on energy this week. If you look at the ETF for XLE, it looks weak, right? It's been kind of rolling over here a little bit. Maybe some people might call this a head and shoulder pattern, forming that right shoulder right now on it. Let's see. Why don't we just do a little bit of artwork? I don't think I need a snap tool. We can go right through here. I'm going to go through the bodies because I prefer through the bodies. So you could make the argument that here is your left shoulder, the head, and now we're forming the right shoulder. And if that's the case, in energy, you can see some more downside movement here, and there's a lot of them reporting this week. All right, what else do I got? Reading The Creature from Jekyll Island, definitely worth the read. Yes. Oh, yeah, once you read that, you kind of just shake your head and go, is this really happening? I mean, I feel like I'm in some kind of la-la land, but hey, keep on moving forward. How do you use your credit card to buy another exchange? Credit cards, well, don't get me started, brother. Don't be using your credit card to buy stuff. What else we did close below Thursday? Yeah, it certainly could, Kevin. And again, I don't feel confident with the Russell one direction or the other. To me, it just feels like we're just chopping. So I don't really have any strong opinions on the Russell. Just trade the range. The S&P, though, now I like this one a lot better, right? Because we've got this pretty tight range for the past 7 days, right at 4,400 on the S&P. We get a break above that, you get another nice leg up. If not, we'll probably retest those lows we established a couple weeks ago, which get you down around 4,250 on the S&P, which certainly, 120-point drop would be a welcome sight for anybody's short portfolio. Let's see. An OXBR, huh? OXBR. I never even heard of this company. All right, so here's the question from Drew. Montesino says, can I get your thoughts on OXBR? The daily is showing an ascending pennant, and the weekly is in a cup. Well, that's fairly subjective. I mean, right now what you have here is just a shit ton of chop. I mean, this is big swings. It doesn't look like much when you look at the price scale. I mean, this thing has a gigantic ATR for something that's only a $3 stock. So really high swings out here. I would say, yes, this current action does look like it's building and getting stronger because all these topping tails seem to be getting higher and higher and higher, but it's really not forming any highs, or any new highs. So what I would do is I just draw this line in through here, arbitrary. It's just to get the sense for it and kind of measure that triangle and say, okay, we are in a pennant formation on here. It's not the best looking pennant. It's just really rough. If that happens, normally you'd see price continue to the upside, but I wouldn't subscribe too much to the cup and handle on this one. Here's your weekly that you mentioned. Yeah, especially when you got those crazy wick tails. Not a big fan. And like you point out, on the daily, there really isn't much volume at all. 180,000 shares today. It looks like it's average. What is the average here? 2.8. 2.8 is actually not too bad, but I think that has to do with this gigantic spike back here that happened on the 14th of July. That's still skewing the data and caused it to pop up. Before that, it was trading, maybe a million a day. So, doesn't look very good to me, but I would move on to something else that has a more predictable price pattern. Even to say predictable is not the right word, but a better looking price pattern that might be cleaner and give me some opportunities. Like, shoot, look at that S&P. S&P looks great right now from a sideways possible breakout. All right, that's going to do it for me. If you guys have comments, questions, feedback, you know what to do. You can email me at TraderMerlin@gmail.com. A lot of you guys have been sending in questions. I appreciate it. It kind of steers the show. Today we had a whole bunch of questions, so thank you. Let's see if I can give a shout out to those that sent them in. Thank you, Michael and Heather, Ethan, Will, Clint on the Aussie, and then Rudy for your BitQ and BitW question. So thank you guys so much for joining today. Hopefully you guys enjoyed it. Hope you learned something. And again, I just talk about what you guys want to talk about. Unless I have some trades on. I didn't make any trades today, so I'm all right with that. Hopefully I'll get some trades tomorrow. But if you guys have something you want me to cover, talk about, analyze, let me know. Send it in, TraderMerlin@gmail.com, or put it down below the video down below. Have a fantastic evening, everybody. I will see you all mañana. Take care.